thank you very much, everybody, for joining this Skillshare webinar on the Forest 500 and the new deforestation data that will help companies build transparency in their supply chains, hopefully. My name's Rob Soutar. I'm the environment editor at the Bureau of Investigative Journalism based in London, and I'll be hosting today. About the Forest 500, it's now in its 11th year, and it assesses and ranks the 500 companies most exposed to deforestation. So these are companies that have the biggest impacts on global forests, but also the potential to drive real change. So today we're going to look in detail at the open access data, and specifically how journalists and other researchers can use it to home in on the actors that are driving deforestation. And we'll also explore the Forest 500 screening tool that allows users to search the deforestation exposure risk of the most influential companies and financial institutions by name, jurisdiction, commodity type, and industry sector. So a fair bit to get through in the next sort of 40 to 45 minutes. A couple of housekeeping points before we do start. Please post any questions in the Q&A box. We will try and allow for as much time as possible to answer them later. The webinar is being recorded. The recording will be available on YouTube shortly afterwards too. So to our panel, we have Emma Thomson from Forest 500 and who is also the tracking lead at Global Canopy. We've got Dr. Katalin Csatadi, who's a researcher and writer at Ethical Consumer, and Heather Clancy, who is the editor-at-large at Trellis Group. So welcome to our panelists. Thank you very much for joining. And before we hear from them, we just want to do a super quick poll to find out what you all think about companies' deforestation commitments, and specifically what percentage of companies don't have publicly available deforestation commitments. So what I want to know, and you can see, you should be able to see the poll pop up on your screen now. What percentage of companies do you think that is that have no publicly available deforestation commitment? 14%, 24%, or 34%? We'll give a minute or so for you to respond to that. So a couple of you, just one person thinks 14%, 17%. 7 of you think that it's 24%. About a quarter of companies have no publicly available commitment. And the majority of you, which is reassuring, are correct. And it's 34%, so just over a third of companies have no publicly available deforestation commitment. Make of that what you will. Clearly, there's a need for the kind of work that Forest 500 is doing. So, Emma, we want to hear more about it. We want to hear how you collate the data, and you can tell us a little bit more about the top-level findings, and then we can sort of dive into a couple of use cases. So, over to you, Emma.
Great. Thanks, Rob. So before I get into the detail of how we collect the data itself, I just wanted to share a little bit more about what Forest 500 is. So as Rob said, Forest 500 identifies and assesses the 500 companies with the greatest influence on deforestation globally. We select these 500 companies based on their production or use of the 9 highest forest risk commodities. So we're looking at companies throughout the supply chain, from producers to processors to traders, manufacturers, and retailers, across all of the 9 commodities. If I could have the next slide, please. Thank you. So the 9 commodities we look at include beef, leather, soy, timber, paper, and palm oil. And then this year, we also added 3 new commodities, so cocoa, coffee, and rubber, which commodities, those 9 are also all included in the European Union deforestation regulation. And once we've selected these 500 companies, which we do every 2 years, we then annually assess them on the strength and the implementation of their publicly available commitments. on deforestation, on the conversion of natural ecosystems, and also on the associated human rights issues which accompany or can even drive deforestation. And we do this by looking at any information that the company has published on their website. Global Canopy completes these assessments independently with the support of translators, meaning that we assess all of the companies in the primary language of the country where they're headquartered, as well as in English. And then once we've completed and cleaned the data, so we collect over 200,000 data points, we then identify and verify any changes between the previous year's assessments. And we then share that completed assessment with the companies that we assess. So that gives the companies an option to view and potentially provide comments if they wish. But any of those comments must relate to publicly available information. So we really are pushing for transparency in the data that we collect. And then once we've responded to any comments raised by the companies, we then publish the entire data set on forest500.org, along with a total score for each company, and also scores for commodities and individual indicators for more in-depth analysis. So that's how we select and assess the companies. And then if I could have the next slide, please, I will go through some of the key findings from our latest 11th year of the Forest 500 data. Across the 500 companies, they can really be split into 3 groups. As you can see, we have the laggards, we have the late majority, and we have the leaders. So all 3 of these groups have room for improvement, but particularly the laggards and the late majority. So as many of you said, 34% of the companies that we assess have no publicly available deforestation commitments for any of the commodities that are included in our assessments. And then within that 34%, 24 companies are persistent laggards. So they are companies that have been included in the Forest 500 for all 11 years and are still yet to publish a single publicly available deforestation policy. So they have a lot of work to do. And we then have the late majority, which are companies that have either partial commitments where they have deforestation policies in place for some, but not all of the high-risk commodities that they're using, or they have strong commitments, but no evidence of implementation or no evidence of reporting. So a group that, as you can see, 316 really are the majority, but they're doing something, they just need to keep on moving. And then finally, we have the leaders. So there are 16 companies, 1/6, that have both strong deforestation commitments for all of the commodities that they're assessed for, and also evidence of adequate implementation. And that's just adequate implementation. There is still a lot of progress to be made. So the picture is very mixed, but there are really these kind of these pockets, these case studies where change is possible, it is happening, and it can be done, but there is still a bit more work to do. Yeah, if I could have the next slide, please, as well. Thank you. So these are just some of the stories from the data in a little bit more detail, so you can really see what the Forest 500 data can show or be used for. So here it's that cattle, so beef and leather, is driving the most deforestation globally, but corporate action in the sector lags compared to the other commodities, as you can see. So at the top of this graph here, we have palm oil, where 76% of the companies we assessed have a deforestation commitment for that commodity. And then right down at the bottom, we have beef and leather, where it's 37% have a deforestation commitment and 30% respectively. So even though these commodities are the biggest drivers, we're seeing this huge difference in action from the companies that we assess. And there are lots of reasons that this might be happening. Palm oil has been the subject of a number of campaigns. It really has captured the public imagination over the past kind of 20, 30 years. And so companies perhaps feel the pressure to act on this commodity because of that consumer focus. Palm oil and timber as well, as that second there with 73% of companies having a deforestation commitment. These are commodities that have very well established, very fairly accessible certification schemes like the RSPO, the Roundtable for Sustainable Palm Oil, and FSC, the Forest Stewardship Council, where companies they have this third party, that they can use to verify whether their commodities are deforestation or conversion free. So it's really a tool that can aid their implementation, help them make progress towards action. But we need companies to act on beef and leather. This is a continued trend we've seen for nearly 11 years, pretty much, and we really do need to see action here. And then very quickly, I just wanted to, on the next slide, please, also highlight our human rights data. So in addition to deforestation and conversion, we also assess companies on the associated human rights issues linked to deforestation. We assess a number of different indicators, but here you can see 4. So we have an indicator on whether the company commits to respect the free, prior, and informed consent of Indigenous peoples or local communities. We also have whether they respect the customary rights of Indigenous peoples to land, resources, and territory, whether they adopt a zero tolerance approach for violence and threats against forest, land, and human rights defenders, and finally, whether they have a policy in place to respect the labor rights of the employees in their supply chain. So as we saw with palm oil and cattle, we're seeing here a really significant difference in the number of companies that have a commitment in place. So as you can see, for labor rights, 38% of companies have no commitment, but 32% have a commitment, due diligence process in place, and are publicly reporting on progress. So ticking 3 of the big boxes that we need to see a strong commitment that's actually being implemented. But for the other 3 rights, as you can see, moving up the graph, these numbers really start to drop off very, very quickly. So this is just another example of our data, specifically our human rights, where we focus on first the policy, then the processes in place to implement that policy, and finally the reporting to showcase progress that's being made. And I think that I will hand back to you, Rob.
Thank you very much, Emma. That's a great comprehensive overview of your very complex data. I just wondered if I could really quickly ask, you're seeing new commodities enter the fold, like rubber, which, as lots of people know, we may burn through quicker as EVs roll out because they're heavier, and demand is therefore going to probably increase. Are you what's the sort of direction of travel in terms of the commitments? Are we seeing tougher commitments? Are we seeing companies generally strengthen them? You're saying some are responsive to pressure. Is that something you're seeing across the board, or maybe you could just give us a bit more on the direction?
Of course. So we're seeing a fairly mixed picture. There are some companies that are starting to weaken very subtly their commitments, either lengthening the target date, so pushing it out from, say, 2025 to 2030. So we're seeing these more subtle weakening of commitments. But as you said, we've just added these 3 new commodities. We've added 150 new companies into the selection this year. And so we have done this for many reasons, but partly it's a great time to expand the focus on these companies that do have the power to change, and to, at this critical moment, really encourage them through the data, through our assessments, to make the change that we need to see.
Brilliant. Thank you very much. I just say it's quite nice to see we've got a couple of questions in the Q&A, both anonymous. If you can give us your names, and if you want to, an affiliation, and attach it to your question, that'd be great. Anyone else who wants to add questions, please do so, and we'll try and get to those shortly. So thanks again, Emma. I'll very quickly say how, as a journalist at the Bureau of Investigative Journalism, how we use this kind of data, and then I'm looking forward to hearing from Katalin and Heather about how they use it. But we really find it a really good jumping off point for our investigations, because the Forest 500 data helps identify companies with certain policy commitments, be they weak or be they strong on deforestation risk, that gives us something to hold companies accountable for. And also the sort of trading relationships that are established help us determine the audiences for our stories. We can't necessarily, deforestation, a company's poor level of deforestation risk exposure is obviously something that a responsible business will want to manage, and we'll hear more from our speakers about how they do that and how they pressure them to do that. But for us, it doesn't really meet it wouldn't quite meet the threshold for an investigation. So we would need, and as the report notes, we would use supply chains, which are complex. We would map those out and try and make direct connections with deforestation. So for beef, for example, which we've done a lot of, we would need to show illegal forest loss at the farm level or individual property level around the time that cattle were ranched there or moved on between farms, and we would need to combine that kind of information on cattle movement, shipping data, with other evidence, basically, to build up the case. So it's a great jumping off point, and to allow us to go away and do the sort of reporting that we do. But let's hear from Heather, editor-at-large at Trellis, about how the data helps you.
Great. Well, thanks, Rob, for the introduction, and also thanks to the Global Canopy people for including me today. I really appreciate it. So Trellis is a business-to-business publication, media site that really is focused on identifying best practices. So my job is to look for the constructive, right? So yes, I do need to know who the laggards are, and we definitely focus on them. But my role is to identify best practices so that they can be scaled, and so we can point to the things that are happening and that are positive and encourage scale up of those actions. I have very limited resources, so I really rely on independent research of this nature to really help validate the claims that corporations are making, and to go in and find the ones that are leading and lagging, as you were just mentioning. It's especially important that I have this sort of resource now as companies step back from making voluntary disclosures. We've seen a lot of companies start to green hush and not talk as much about what they're doing, even if it's good. And resources such as CDP, which have been traditionally very valuable, have been limited. Like, we've seen a shut off of that data. So that's kind of a scary trend. As far as the Forest 500, I've actually been, and I don't know that they know this, but I've been using this data for more than 5 years. And if you search on my name and deforestation, you'll see a number of stories that reference the information in this report. I will also point to a couple of other resources just for the folks on here that I think are super valuable. There's the Corporate Climate Responsibility Monitor by New Climate Institute, and Lobby Map. So that one focuses more on the emissions claims, right? And then also Lobby Map from Influence Map, which really outlines corporate policies and how they're engaging, how policymakers at corporations are engaging on climate policy for good or bad. So I think those are two other resources I would mention in the same realm as this work that that's being done in the Forest 500. The way I use this sort of research is in really three kind of buckets, if you will. One is to validate corporate claims or statements. So if I see someone put a deforestation statement out or a commitment, I'm like, okay, where does that fit with others? Is this good? Is this bad? It just sort of helped me understand the perspective of in general. I also secondarily rely on it for trend spotting. So in the past, I've written about like the money, right? So several years ago, the research really focused on how financial institutions were supporting companies that were actually contributing to deforestation. And, that was like one of those ahas for me. Like, so if, XYZ financial services firm is funding a company, and I'll actually mention them by name because they're really an example of what not to do, but JBS, like, we should know about that, and the financial institutions should be called on that. So in the past, I've focused on that. In the future, based on the current report, one of the things I am really going to look into more deeply is the rubber impact, right? So, and I think one of the things that for me as a journalist, the research has really highlighted is how I think people in general tend to think about deforestation and they equate that to, oh, paper. They don't think about the all of the industries and the exposure of so many industries to this issue. And automotive industry, perfect example. Apparel companies, perfect example of rubber. Those two industries are very focused on that. And then sort of the third thing I do, as I referenced at the beginning, is I look for case studies. So again, I'll just point to this the latest report. I feel like there's an opportunity for me to go and dig deeper into what Michelin is doing. As a case study in the rubber, there's a number. The first time you've looked at the tire makers, right, in this report, and I think that's really important. I've written quite a bit about various alternatives to natural rubber and recycling and so forth. But this really helps me understand what the companies are doing. I also was just floored by how far ahead Suzano, the paper company, is from like pretty much all the other corporations. Like I was circling the ones that were above 50%, and there's very few. And Suzano had a 91, like in this latest research, which is pretty standout. The two closest companies are in the 70s. So like, and then everyone else is kind of in the 50, So why is this company so far ahead? That to me is a big question. And then particularly right now, JBS is the meat company is wanting to go public. And I think that investors really need to understand the risks of this strategy and how it is could potentially impact its future growth and also the damage that it's doing. So those are like a couple of case studies out of the latest data. And then in the future, I'm just going to mention this one last thing, and Rob, then I'll hand it back to you. But one thing I'm particularly interested in looking forward is how the U.S. tariffs will affect strategies to address deforestation. Like, is this going to put more pressure on companies to do less, which scares me. And so that's a question I'm just going to throw out there. I'm sure it's probably on the minds of Emma and the other researchers, but that's just sort of where, from my perspective, things to think about. Rob, I'll hand it back to you. I'm sure I could keep talking, but I'll let you ask your questions and let's get Katalin also involved.
Thank you. Yeah, we should get Katalin involved, but I'd absolutely, I think a lot of us will share the concerns about the lack of pressure or the kind of the general environment of green hushing, companies playing down any kind of sustainability commitments or just not talking about them for fear of being accused of being part of a woke green agenda or whatever. And we've seen, as well as the tariffs, that's a lot of the work we've done on banks, they're just rolling back on their commitments. So it is a really, really difficult time, as you rightly point out. And companies like JBS, who, for a long time spoke the language of net zero commitments when it was politically convenient. Now they're not doing it. So it is a big concern. And yeah, their listing in the US again is a big concern. You just maybe this is a good time to go to Katalin, because let's talk about investors and climate conscious investors, the ones who have the power to influence companies and their behavior. Katalin, please tell us more about how you account for deforestation in your ethical ratings, how you use this data to communicate with your audience, and if you're able to, because I know a lot of us are grappling with this question, how we can press consumers, investors, other kind of change makers to encourage companies to embrace sustainability.
Thank you, Rob. Thanks very much. Yes, I'm very happy to talk about how we are rating companies. At Ethical Consumer, we have been rating companies for over 35 years now. And the way we are doing it is applying a set of standard criteria to companies we rate. we have core categories and we have bespoke categories depending on the sector. The core categories include climate change, how companies mitigate their impact on climate change, their approach to workers' rights, also their tax conduct and their overall company ethos. And then depending on the sector, we have various bespoke ratings, and they always focus on the issues that have the biggest impact on the environment or people or animals. So for example, if we are rating clothing companies, then the bespoke rating will be cotton sourcing or other clothing materials. If we are rating solar panels, which we are actually doing right now, we are working on our solar panel guide, then the bespoke rating will be solar panel materials. Deforestation comes into view in several of our guides. If we do furniture guides or where palm oil is used and cases like that. But we specifically use the Forest 500 guide in our financial guides. And to give you a better idea how we do it, I'd like to share my screen. What you're looking at right now, hopefully, is the Ethical Consumer website and the Ethical Bank Accounts Guide. And I just would like to scroll down right here to the bespoke ratings. So when we rate financial companies, we look at their lending policy, namely what they are saying, what kind of companies they are willing to lend money to, because this is the biggest impact a financial company can have. But apart from what they are saying they will do, we also look at their loans and investments. And within this category, we use the Forest 500 report, as well as benchmarks and other reports from other NGOs that does this kind of work. So with the Forest 500 report, in a little bit, I'd like to show you an example of a bank. But essentially, we are deducting or adding points to companies based on whether they are in the Forest 500 report, and if they are, then at what level they are. Are they at the top, a leader, or are they a laggard? But apart from banks, I'll just show you. Can you see ethical investment funds? So within financial companies, we also rate pensions and insurances, but also ethical investment funds. And the way we use the Forest 500 report here is, again, I'm just going to scroll down all the way here to the portfolio of investment funds. So what we did when we rated them is that we created the list of 868 harmful companies based on the reports of NGOs like Global Canopy. And if an investment fund invested in any of these companies, then they had points deducted. And that is how we are able to give a view to our readers to make a conscious ethical decision in what banks they use or what investment portfolio to put their money in.
Do you mind telling us who some of the best and worst are? I mean, they will obviously correspond quite closely to Forest 500, but who are some of your?
Do you mean the banks?
Yeah, the banks. Sorry, yeah.
The banks. Yes. So this information is normally available to our paid subscribers, but I'm just gonna give you a sneak peek because that's what you're here for. So at the very top we have Trellis Bank by far.
Yeah.
By far, Trellis Bank. They are transparent, and they are they have the right policies and the right actions. And as you scroll down, you're just gonna see the high street banks. So the lower you go, the more you see the more common names: HSBC, Lloyd, NatWest, and all the rest.
Thank you, Katalin. That's good. It's good. Yeah, and all the rest. I might just jump back very quickly to Heather, and then we'll get to some of the questions, because the questions are going well. Who have you? You gave us some examples of companies that you're concerned about. Can you highlight some, maybe one more that's doing really well? I mean, you mentioned the paper producer, but in any more kind of examples that you've got?
Yeah. So, I mean, I'll just give you an example of a company I wrote about last year, and which actually now I flagged myself for follow-up for, because it was about a year ago. And that was Kimberly-Clark. And they're kind of in the middle. They're above the 50%. They're above the 50 mark in the latest research. Not fantastic, but I was able to use the research, and then also Emma directly, to help shape that story. So last year they changed their chief sustainability officer, and they made a natural forest free claim. So what I was really able to do using the research was, number one, figure out what that meant. Like, what is natural forest free? Like, kind of parse that, understand the language, because it wasn't something that I was completely familiar with. I was able to ground the claim by using and looking at the peer set for the company. The other, this particular case, it really has to do with their paper products, toilet paper and so forth, and really assess the company against its peers. I think for me also, one of the things that I really appreciated after consulting the research and also speaking with Emma was the focus on northern forests, right? So Canada and Alaska, which I think people don't talk about, they don't get as much attention as the equatorial rainforest, but they're super important to be focused on, especially with the increased northern wildfires. We were prepping for this call last week, and I was in Winnipeg 2 weeks ago, and huge fires in Manitoba. I mean, like, I don't think people appreciate the increased wildfire activity in the north. So, where I'm going next is to check on the 2025 progress, because one of their first milestones is due this year, and gonna kind of go back and check on that. But yeah, it was a great way of grounding and understanding what that claim meant.
Excellent. Thank you very much, Heather. I just wanted to say, sorry, with the timings, we will get to your questions in a moment. But we do have the Forest 500 Skillshare video, crucially. Forgive that noise if that's come from me. So we can show how the data is used. So should we go to that now?
Each year, Global Canopy assesses and ranks the companies and financial institutions most exposed to deforestation risk. This short walkthrough video shows you how to take a deep dive into the data to see how companies and financial institutions address this risk. Let's start by going to the rankings page. Click here to move between companies and financial institutions. Select the assessment year here. The data goes back to 2014. By default, the table is ordered by total score from highest, meaning best performing, to lowest. You can change this by toggling the arrows at the column headings. You can use the filters to search, type a company name in the keyword search box to access a company profile. The company's total ranking is shown alongside a breakdown of its score for the 5 assessment criteria. Breakdowns by commodity are displayed underneath. Click the company profile button to see company-specific information. This page contains a company description, industry sector, and headquarters. The entire company assessment can be viewed here. This area shows which of the 9 forest risk commodities the company or financial institution is exposed to. and company scores are broken down for each assessment criteria and commodity. Click the Information button to open a pop-out with the assessment indicator question and evidence of the company's assessment. This links back to original source documentation on the company's website. Now we go back to the rankings page. Use the headquarters drop-down to view companies by country of registration. Use the supply chain segments drop-down to explore exposure by value chain segment. Here we home in on manufacturers. If you wish to explore by industry sector or commodity exposure, choose from the drop-down menus here. Here we're focused on agricultural products and beef. The data can be downloaded in bulk as a CSV file. Simply click the download button and fill in the form. Your details will be saved for future downloads and do not have to be re-entered. From a company's profile page, you can download a CSV with a score breakdown for the year of your choice. If you'd like to know more, get in touch by emailing forest500@globalcanopy.org.
Thank you very much. And as I said earlier, the recording of this, including that video, will be available on YouTube after this webinar. Now let's go to questions. I mean, it would be great to hear from all the panelists on this, but let's start with Emma. Emma, I've got a question that asks, what do you think the most powerful levers for encouraging change are within companies? Is it pressure from consumers, investors, or somewhere else? Even with the data that we've got, the strong data that you've compiled, the attempts often fall on deaf ears within companies. How would you respond to that?
I think that the data is data, and it is important to have, and it really facilitates change and progress. But we do need, of course, action from those that are contributing or at risk from these issues. So I think there are a combination of different levers that really all need to be pulled at the same time to drive real systemic change, especially across all 500 companies and their broader supply chains. I think financial institutions and investors are a critical one, through those financial institutions themselves having strong policies and processes to require the companies they finance to have processes in place. Legislation is, of course, an essential driver that really does level the playing field. But campaigns, public pressure, NGOs, and the work that they do, it really is all kind of part of a really broad ecosystem that does all push to drive change from these companies.
Excellent. Yeah, thanks very much. Interesting tools that investors have at their disposals, like shareholder resolutions, AGMs and spaces for engaging with the senior leadership and that kind of thing. Let's go to Katalin and then Heather, please.
Can you repeat the question for me, please?
The most powerful levers for encouraging change within companies, is it pressure from consumers, investors, or somewhere else?
Well, of course, at Ethical Consumer, we are in the business of talking to consumers, but we don't only have people that buy for themselves. We only talk to companies, and companies are able to screen their supply chains through Ethical Consumer. And essentially, a company's biggest impact comes from their supply chain. At the moment, as we all know, investors have a massive influence on what a company does, because a lot of them tend to just go for profit. But we see at Ethical Consumer, we have an ethical market report that we have been doing for the past 10 years, and there is an increase in ethical spending. So even though investors are still a major influence, we believe that consumers have a massive impact, as well as there is a reason for the green hush or the greenwashing. Companies do see that there is a need, there is interest in people to spend ethically, so they often try to show their ethical side, and sometimes it is truly ethical, and that's where change is. So while I can't give a full answer where change comes, we firmly believe that bottom up is a very strong way to go.
Excellent. Thank you, Katalin. And Heather?
Yeah, the only thing I'll add just very briefly is license to operate, right? So if this strategy is going to cost the company more in the future, the finances, the costs will, you know, like if they can't have access to the commodity, if it's going to affect their ability to generate revenue, I think that's a very powerful lever. And that one is when the most effective sustainability strategies in general are ones that really closely align with the CFO. Right. And so how it's going to affect procurement, how it's going to affect revenue. So I would just add that as a lens.
Yeah, absolutely. And it can be good for business as well, right? That's the point. And
exactly. It can be a differentiator. You know, we see mixed results as to whether companies or whether consumers are willing to pay more for these things, right? You know, they always say, oh, they will, but they don't necessarily, except maybe your base, Katalin. But anyway, yeah.
Yeah, I mean, it's similar. There are parallels with the energy sector as well, right? Lots of investors are kind of investing in both renewables and some of them still in fossil fuels. But while they were playing up the renewable share until very recently, now they're kind of playing it down. They understand that the economics of the transition are almost unavoidable. It's going to happen. And so there are parallels with the sourcing of forest commodities as well. So very interesting there. I don't know if we've got time for one more quick question. And we've sort of nodded to it already a fair bit, but just specifically on US companies walking back the commitments. You know, with the data is the data. We're not necessarily attributing causes, but does anybody want to sort of respond to the point about, is it the political climate largely that is forcing companies to walk back on these commitments? And if so, what can we sort of do about that? Let's Emma, by all means, go.
Sorry, I'll be quick and then hand over to Heather.
Thank you.
I think that companies across the world are looking at their commitments and are either, some of them are strengthening them, and that is really important to highlight. This, as we've said, is a financial risk. It is a material risk to these companies. They are heavily exposed to deforestation risk and do need to act to protect their business as well as to protect everything else. But there are companies across the world that are changing their commitments, are backtracking, are weakening, but the science hasn't changed. This is still action is needed.
Thank you, Emma. And I mean, we are unfortunately out of time, but it's a good point to close on. That, you know, the potential is there to change, and you know, for everybody that's working in sustainability field, everyone that's working in journalism or research, that's the change that we want to see, and hopefully the data will help arm us with some of the tools we need to demand that. So thank you everybody again. Thanks to our panelists, Emma, Katalin, and Heather, for your insights. And if you have any questions, please get in touch with the team at Forest 500. That's they're contactable, forest500@globalcanopy.org. Again, the webinar is recorded, so please check in on YouTube afterwards. And thank you very much. There is also a short survey which will appear in your web browser after the webinar's ended, and feedback is always very gratefully received. So thank you very much for that, and we'll speak soon. Goodbye.